buy signal as we move through the month of May, 390.65 considered. Now I'm going to call that a 3 to 5 week objective if we were to close above 293.06. But before that, ahead of that, I don't know if we'll see that today. I do think if we push, especially if we open today above 271.27, a simple trend line off the highs the last couple of weeks, that is an area that may contain intraday, possibly daily highs, and below which we can fall back to 237.34 perhaps. 237.34 is nothing more than the 5/8 downside Fibonacci over the last 3 weeks of activity, over the last 3 weeks extreme. So buying 237.34, aggressive day traders, selling 271.27, aggressive day traders. If we push through, especially if we open above 271.27, that 290.10 level in reach today. It may, though, require a settlement today, Monday, above 271.27 for yielding 290.10 tomorrow, Tuesday. 290.10, the beginning of a gradually narrowing zone up to 293.06 that may well contain not only weekly highs, we have it as a 3-star weekly resistance, should probably be bumped up to 4 stars as I look at this, because we could top out here through the month of May and from here fall to new lows, fall actually to 161.97 within 3 to 5 weeks. So holding below the 290s, the low 290s, the 161.97 long-term support remains in reach, and that is the beginning of a zone down to 155.86 that can contain annual selling pressures. This is a weekly bar chart that goes back some 4 or 5 years, and 155.86 to 161.97 is a 5-year channel bottom, well suited to contain quarterly, possibly annual selling pressures, and yes, that area should be considered attainable over the next 3 to 5 weeks, below 290.10 to 293.06. Now, if I don't see it today, but if later in the week we close above 293.06, then we enter a significant buy signal that I would expect yield 390.65, that descending 2/3 speed line, within about 3 to 5 weeks above, closing above 293.06. Downside, 237.34 can contain intraday selling, but if we break or open today below 237.34, this channel bottom at 203.95 should be considered attainable. Now, once again, it may come to, closing today below 237.34 does set up the 203.95 descending channel bottom as a 1 to 2 day target. That is also what's possible. But in a high volatility environment, and the volatility has been contracting, gradually over the last couple of days. So if we close today below 237.04, 237.34, then that 203.95 descending 2-week channel bottom expected within a day or two, where we can place a daily low. And if over the coming days we were to close below 203.95, our 161.97 3 to 5 week downside likelihood is potentially in reach within 3 to 5 days, but I'll call it 1 to 2 weeks. Closing below 203.95, 161.97 is expected within 1 to 2 weeks, and that is once again the start of a zone down to 155.86, well suited to contain selling through the rest of the second quarter and even into later year. And so if you're short Tesla, this is a solid zone to not only cover the short position, but to reverse and go long. So in terms of the big picture, the short sale, the low 290s, anticipating bearish rotation then back into the low 160s. Inversely, closing above 293.06. No good reason to be short Tesla as we move into the month of May, anticipating this 390.65 descending 2/3 speed line. With speed line analysis, FYI, when you close above the descending 1/3 speed line, the descending 2/3 speed line becomes your objective. And I see good reason for that. There will be Fibonacci levels on the way up. 319.02 is, for instance, a 3/8 upside from that December high against that recent low from last week, and that could give the market trouble for a day or two. But I do see progressive gains made as we move through May following a settlement above 293.06. Until then, Tesla is obviously in a consolidative mode, but bear trend activity can resume at any time, and I do think aggressively so if over the next few days or the next week we close below 203.95. Until then.
Thank you, David. Thank you, Sarah. Jensen, we are in the capital of artificial intelligence.
You sure are.
Yes, and you are the leader. And you put out a number yesterday. I've never heard a CEO ever say, listen, we got $1 trillion roadmap, and it's going to happen sooner? How is this possible?
Well, we're building AI infrastructure for the world. And it is very clear now that we're about $150 billion of AI infrastructure into a journey of trillions of dollars of infrastructure. And so we've got a lot of AI to build.
I was here last year. Totally different feel, different vibe. Felt there was a limitation to it. What happened in 1 year?
Well, in 1 year, we made AI better. It's smarter now. It can reason. We made AI more useful. Just about every industry and every company, all these companies are all building AI into their systems and into their products. And we've got a lot more energy and a lot more land and just so much more desire to build out these AI infrastructures.
There were people who just even a month ago were saying, look, there's an outfit in China that is going to eliminate a lot of what NVIDIA provides, and therefore NVIDIA's these chips are way too expensive. What I saw yesterday was that not even a factor in your thinking or anyone else's thinking. It was a distraction.
Well, it is true that these processors and these computers are quite expensive. They're quite expensive to make. And this is the largest chip in the world. It is the most complex computer the world's ever made. And so it's expensive to make. However, it saves you a mountain of money because it does work, saves you a mountain of money because the amount of time it saves you